Hi, everybody, and welcome to the Executive Buying Weekly Market Wrap for April 28th, 2017. I just wanted to get right into it this week again, and let's see what we were actually able to highlight and do this week. First off, one of the companies that we put on back in August of last year, ARR is a ticker symbol. We were able to remove this week at $24.07. So on the price of the stock itself, we got an 8.9%, 8.96% gain. But this is a company that pays about 9% a year in dividends. So we also collected 6.3% in dividends to get a total return of 15.27% on this insider purchase that was done back in August. So this is a company which was down pretty big. It was up in the 70s a couple of years ago. We saw it dip big, and a successful insider stepped in and bought shares. We followed him. We collected some dividends along the way. We saw a little bit of a pop in the stock price, removing it, taking the money and run, not a bad thing. Next thing, what we're adding to the focus list this week is a company called International Flavors and Fragrances. So in this particular company, we're following a fund called the Winder Investment Fund, who's a 10% owner, which qualifies them as an insider for this company. Now, Winder actually purchased between $123.81 and $139, a total of $117 million worth of this company. So it trades on the New York Stock Exchange under the symbol IFF. What we are looking at here is a monthly chart. This company has been in business since 1833, and we've seen basically since 2009, nice uptrend. Okay. And we're continuing to see in the past 3 months this little dip that was bought here by Winder to put $117 million into the company and to buy it from 124 and continue to buy it as it approaches 140 is not a bad thing. It's good to see that they're buying into strength. It's good to see that they stepped in on a dip, and they obviously expect this trend to continue. So we're going to add it to the focus list this week. We think that the stock could get to $159. I don't want to put more than a $10 risk or so in it right here at this level. And we'll go ahead and put it on, and hopefully we can get the same result as we did with ARR. So that was obviously a nice little move that we're hopefully trying to capture here. So the other thing that I wanted to show you was this particular week. We started off with a nice gap on Monday. We closed the week out here at this level. We opened the following week here with what they call this is a gap open when it trades way higher than where it closed on the previous day. And then we gapped again on Tuesday morning, and we had reached the pinnacle on Wednesday, Thursday, Friday. We're a little bit sideways. So that's kind of how the week went with the S&P 500. Good week. We're not at all-time highs, but we're getting closer. It's seemingly almost every week. And not bad earnings reports. The earnings reports are actually coming out to be really good. One of the things that you'll see a big difference in, and I pulled up the chart this week, this is the S&P 500. If you take a look at the NASDAQ, this is interesting because you don't have that kind of meandering towards the end of the week with this NASDAQ. You just have a lot of companies that reported good numbers, like an Amazon, for example, that has a large percentage of the cap in the NASDAQ 100. And I think that's why you're seeing the tech companies outperforming the overall market. So that's kind of where we're at with everything. We're starting to see some insiders step in and nibble here and there. They're still not coming in with full force, but we are still in the middle of earnings season. This was actually the most busiest earnings season week, I believe. So next week and this week will be pretty hot as far as how these companies are going to be coming in and what they're earning and how they're reporting. So this week we added a company that was about $140. A while ago we added a company called Tesla that was about $263 a share. And for I guess the information portion of the video, what I wanted to do was just kind of contrast and compare what seems to me to be a very common misnomer with investors. And that is that if you buy more shares, so this is a chart of Ford, okay? And Ford's trading at about $11.47. It's one of the companies that we put on the focus list. So if you buy more shares of a company, let's just say like Ford, with less money, so hypothetically, let's just say we take a $10,000 investment and we put it in at $11.47, we're going to be able to pick up 871 shares. Now that feels great because we have 800 shares, it's great. Now, if you compare that to Tesla, where we take that same $10,000 investment, okay, and we added Tesla to the focus list at 263, and let's just say we bought that, we would have only gotten 38 shares of Tesla, and the Tesla share price, what it was, when we put it on right about here, okay? So what happens? Your 38 shares is less than 877. I get that. But it doesn't matter how many shares you own. If you look at it as a $10,000 investment and you only look at the percentages that you make on that investment, that's all that matters. It doesn't matter if you have one share, 1,000 shares, or 10,000 shares. Because as you can see here, your 38 shares of Tesla so far have gone up approximately 50 points. So we're in a position where you're going out there and taking that $314 and from where you got in the 262, you have a 52-point gain. Whereas if you went on to the Ford, you're basically break even on your 800 and some odd shares. So my point is, don't get caught in the trap of, oh, I can't afford to buy a Tesla, not the car, the stock, obviously. Um, and I want to buy Ford because I could buy more shares. It doesn't matter how many shares you have. All that matters is the percentage gains or losses you have on the investment. And what happens with these companies is the bigger the price of this, or the more expensive, I should say, the price of the stock, the bigger the moves within that price, so that you do have 38, 40, $50 moves. And that's what makes up for having the lesser amount of shares. So I just wanted to bring that to your attention. I've spoke with a bunch of people on this issue in the past, and it just seems like uh, people are more excited about a dollar stock because they think, hey, if it goes to 10, I'm going to get 1,000%, or it's not necessarily as easy as that, unfortunately. So just keep that in mind. I appreciate your time. Appreciate you guys checking in. I'll be here if you guys need me. You could send me an email, respond if you have any questions. But I guess that's a wrap. All right, thanks.